Okay, guys, I hope you guys are out there trading profitably. Today is May 1st, 2008. We're doing our daily review. The market's been open now for just a little over an hour and 20 minutes. It's 10:51 Eastern Time. And we're just going to take a look at our positions because we've just turned into May. Now, when we've sold the May options, we've created our positions for May expiration. Now we're getting close to the point where we take a daily look at, we always take a daily look, but we want to take a little closer look as the closer we get to expiration because, there's a price risk at this point. There's just adjustments they're a little bit more tricky at this point. Yeah, they are common, but they're a little bit trickier at this point because there's not as many options that when making adjustments. There's still adjustments that you can do, but basically what you're doing is you're tightening the noose around your strike prices and getting closer to at-the-money options at this point when you do make an adjustment. So you really want to be able to make adjustments carefully at this point because we've only got, let's go up to the trade tab here. I'm pretty sure we don't have many days left. We've only got 15 days left. We've got 2 weeks before expiration. So, at this point, what we really want to do is we want to be able to make our adjustments if necessary. Probably we're going to be making those adjustments a little bit closer to the at-the-money positions. This is we're getting down to the wire on our positions. In fact, we could probably even start taking a look at trades that we're going to be making for the next option expiration, which is going to be June. And there's still 50 days out. We can put some initial positions on for June, and I would go maybe June, July on the SPYs. Let's take a look at the volatilities. The volatilities don't seem to be there's a positive skew here, but that's not going to worry me too much. If we go out to the next month, it's even worse. December, September is still 21%. July is 21%. It's actually lower than September, so I would go July. I would go June, July on those. But anyway, we'll take a look at some far out initial positions when we get into another video. What I want to do today is just kind of analyze our current position statement, take a look at our numbers, and kind of go through a thorough examination of our positions. Our current delta on overall positions is about $9, which is absolutely perfect because if we do get a little bump up here today, we're going to collect an additional $9 as prices rise. Our gamma, of course, is always negative because we're selling options. We're always, if we're short options, we're going to be negative gamma. Our theta has increased nicely now. Our theta is up to $54, $55. And remember, when we first put on our trades, it was around $24, $25, or maybe $30, someplace in that range. But it's increasing now. The closer we get to expiration, that's exactly what we expect theta to do. Our Vega is at 56, which means that basically if we drop a percentage point in the VIX, we will lose $56. If we gain a percentage point in the VIX in volatility, then we will make an additional $57. But that is a relatively neutral Vega number, so we're not too worried about that at all. Actually, the EEM and the IWM are positive Vega. The diamonds and the SPYs are negative Vegas. So, if volatility does drop and we continue our upward climb in the markets here, we're going to be looking good on both the diamonds and the SPYs. Get hurt a little bit on the EEM and the IWM position. Our profit is starting to grow. Our profit today is beginning to grow. So we're starting to grow daily on a daily basis here. If we take a look at our analysis tab and we take a look at our overall portfolio, you can see that because, that's May 1st today. We're doing good. We're up. We're up fairly well here. We're doing good. And I think that our position is looking really, really beautiful at this point. We are in the center of our profit picture. There's no adjustments that we really need to do today. If things run up, we're going to have to do some adjustments, maybe something closer to the money on the SPYs or the or possibly something on EEM. But we can take a look. We also have the Qs in our back pocket that we can always make adjustments on, and those are really nice to do closer to expiration, right at the money. So I think we're looking really good here. The only thing I'm concerned about is the VIX. So let's take a look at the VIX real closely here. Yesterday the VIX actually was up just slightly when the market was up like $100, and it kind of it was an indicator here that the market could have gone down. And what happened was yesterday there was a Fed announcement, quarter rate interest point cut, and right after it came out, the market dropped about 150 points. It was up 150 points, and it just went to flat or just slightly negative for the day. I think it was down 11 points. So and the VIX just went up. Let's see, how far did it go up there? It went up almost a full percentage point. Today it's down almost 0.64, which is down almost a full point here. So it's completely reversed. As I mentioned in previous videos, we keep an eye on the VIX just to kind of get an idea where the short-term trend of the market's going to be. Right now, it looks like we're going to be in this range between 22 and 17. I think if the VIX does lose some momentum here, we could drop down into the 18 level, 17 level, which going back here is right around the level that it hit back in November. And we may be in this range here again. And from then, who knows? But I think we're going to trade in this range for a while, which is very, very good for our position. Because if we trade in that range, we're just going to be sliding up and down the scale here, which is great for our position because we just end up making more money that way when prices actually do nothing. Because the closer we get to expiration, our options will simply increase in theta, lose their time value altogether, and we just keep collecting the money, which is great. So I think we're in really good shape here. There's no news out. There's nothing that's really going to be driving the market at this point that's going to affect our prices. I don't think in one way or another, unless we get some really negative news. That's the only risk at this point in our positions. If we get some real negative news and we start trading down significantly, then of course we're going to have to make some adjustments. But also there's potential profits there, some additional potential profits, which would be very, very nice. Either way, we're looking really, really good, and I don't see any reason to adjust anything. But again, this is the daily routine. Take a look at your position statement. Take a look at the VIX. Analyze your profit picture, and you're done for the day. I mean, how easy is this? Okay, it's not rocket science. I think it's a less stressful way to trade, because you can. If you've had other positions on, if you've had if you've done bull call spreads or put spreads or any kind of calendars, and you just kind of if you're doing this one-dimensional type trading where you just put a position on and you just kind of leave it there, and you're not creating a portfolio in which you're creating many different positions over on top of other positions and creating this type of multi-dimensional trading, then you are stressful because you have picked market direction. Basically, you said, okay, I think it's going to go up, or I think the market's going to go down. It didn't do either one, or it went the wrong way. Now you're in a very stressful position, and you're probably losing a great deal of money, and that is never fun. So what we try to do is eliminate that directional risk in the market by taking these non-directional trades. But these are not non-directional trades that we just put on and forget about. These are directional trades. These are non-directional trades that are fluid. In other words, if the market goes against us, there's things that we do to adjust our position. We take a look at our numbers. We see our numbers are not looking good. We adjust our position so that we take advantage of the opportunity that the market's presenting us. Because if it does trade down and too low or too high, it presents additional opportunities. And this is where the allocation of capital comes in and how critical it is. you can't use all of your capital on your initial positions because you need capitals in reserve in order to make adjustments. When you make adjustments, it presents additional opportunities to collect more money from the market. So, do not go out there and trade. There's something called concentration of risk, and I'm going to do a separate video just on that. But basically, the concentration of risk is when you put on one-dimensional trades. If you're, selling the 142s and you're buying the 141 puts, yeah, you're collecting a little bit of credit on those because you're doing a put vertical spread. You're selling a put vertical spread. But then now you've concentrated all of your risk right around the 142 position, and if it moves up or down if it moves up or down a little bit against you, if it moves up, it's great. But if it moves down against you, then you're really going to start hurting. What do? The art of adjustments is absolutely critical to maintain profitability in these positions. And that is something that very few people actually teach you how to do. So, review the videos on our adjustments. That's what you need to do in order to remain profitable and fluid in these markets. If you ran any kind of business, I don't care what it is, if it's a deli shop or a gift shop or, a car wash, you're going to go into your business every single day and say, hey, what did we make? How's the traffic? How's the, what's customer response? How many sales did we make? What are our expenses today? What's our profit and loss? And basically you're doing the same thing. You don't want to just put these trades on and forget about them. You want to be able to manage them on a daily basis. And, today it's easy to do that because the internet is almost anywhere. If you have a laptop, you can monitor these from your laptop. With the Thinkorswim platform, you just download the desktop app and you're all set to go. You can go anywhere and do this anywhere. It doesn't matter. Now they have these cards that you can stick into your laptop computer through your wireless internet or through your wireless phone providers. I know Verizon has one that's a fairly high-speed connection now. You just stick it into your USB port, and you can get a connection anywhere, even if you don't have wireless. If you can't find a cafe with a wireless connection, or you're out in the middle of some place and maybe not too far out in the country, but any place you can get a cell phone signal, you should be able to connect to the internet and check the status of your positions. So this is not this is not the type of business that you want to leave and go away for 2 weeks and never look at it. Even if you're on vacation, checking it for 10 minutes a day is not going to hurt you, right? Then you can go out and surf and go swimming or play golf or whatever you do. So that's it for today, guys. This is how we manage. We manage by the numbers, and we do our daily reviews. So go out there and trade with confidence.